Hey guys, welcome back to the Capital Mindset Show. Today we're going to be doing a stream. It's going to be through the new format. Again, this stream is to mainly test out this audio, whether or not it's good, whether or not it's bad. Have a Hawaii background. Maybe I can set that up. But yeah, just let me know how the audio sounds. The audio should be at better levels. I did that longer video. You guys, I don't know if you guys have seen it or not, but in that video, I did get some comments about the audio, and I wasn't used to actually setting it up, so I actually had to go in and add some filters and stuff to kind of equalize it. But it should be good now. It should be, I guess, better in terms of quality versus other softwares previously used. Now I'm not using StreamYard today. I still use StreamYard for the most part for when I'm doing like a group or having a guest over. But yes, okay, audio sounds great. Excellent. Good volume. You should be able to hear me, because in the last one, I think I was being too conservative with not just, for lack of a better term, ear raping you guys. So I ended up restricting the audio too much. And of course, there was a massive differential between me and the video that I was actually going over. But what I like about this software is it's very easy for me to make this switch here. I can just change the different backgrounds. I'm going to be getting better and better at, I can get like videos and stuff and actually put them in the background, like just clips. That'll be distracting. It'll be mainly for fun jokes and stuff. So today, again, is just to review that, make sure the audio is working good, answer any questions you guys might have. If anyone has also criticisms and wants to challenge me on some things, of course, feel free to do that here. That's what these are for. And it's live, so I don't have time to go like, oh, I need to prepare. No, it's like kind of just up to you guys. So let me think. I'm also going to be doing a couple just stocks, I guess, live, because I wasn't able, because I think you guys can kind of see I'm a little bit sleep deprived. It was a very busy week last week, busier than normal. So I can do a couple stocks live, and I'm thinking about doing, looking off the list, I might do, I know I'm going to do Chewy right here in front of you guys. So Chewy is like a revisit. So the last video I ever published on Chewy, let me actually pull it up here, and I can show you guys. And you see, it's pretty seamless that I can just make the transition. So which is what I like. This is what's making me want to use this software. But Chewy's Worth Taking a Bite right here, published on December 3rd, 2021. I know that this actually wasn't filmed on December 3rd, 2021. At least that I know of. And I know that the price was $66. So I can actually pull that up here. All right, so CHWY stock. And then we can see what's been going on. So it actually has fallen since then. Let me see what's the price point. Reviewing, I already forgot the date. I know this is when it's published, so this is when we're going to go for it. So December 3rd, it's January. Oh, this is 2021. Almost made a little bit of a brain fart there. December. Where are we at, December? There we go. See, a little slow. I'm a little slow mentally. All right. So, yeah, I think it was filmed around here. And then it was published on December 3rd. Because December 3rd, it looks like the closing price. No, it could have been filmed on December 3rd. But anyways, we're down about 31% from that point. And let me actually do a quick test to make sure I can actually still pull everyone's comments, because that's very important. So let me see if I do that. No. Okay, so that's again, this is kind of like a test. It's like, okay, let me see. Can I not actually do that? Hide, put user in timeout, add moderator, pin message, report. Interesting. So that's not that good then. I might actually just stick to StreamYard then. Even though the audio quality here might be better, it does not allow me, it seems, to bring you guys forward, which sucks a little bit, because I like to do that. I like to show some comments here and there and kind of bring it up. Custom emojis, create poll. I can create polls, which is cool, but on here, I mean, at the end of the day, I'd rather just have this here and then have the StreamYard working there, and I can actually bring up people's. So again, a little bit unorthodox here, but you guys are kind of like my live experiment because there's no other better way to actually do this than have it here live. All right, so going back to Chewy here, I think we'll take a look at their investor presentation. Revisiting some of these old thoughts was pretty much a valuation story. It was overvalued at the time. Now the stock price is at $43 versus $66, and I presume it has grown since then. So we're going to take a look at the investor presentation kind of live, and yeah, we're gonna see there. So and again, like if anyone, let me see, remove. This is really upsetting that I can't bring your comments up. I can see your comments. I'm just gonna have to say your comments live, but wow. Share support, custom emojis. Can I seriously not bring people's comments up? Terrible optimization, if you ask me. YouTube needs to prove that. Unless I'm in the just being a complete gooseball and just don't understand where to go. It's probably easy. Send feedback? No. All right. Anyways, going over to the investor presentation here, we're going to kind of just glimpse through this. This is their sales pitch of the company. I assume they're going to be using, okay, so dear shareholder, I like when they address us. We're the boss. We're their bosses. But this is, by the way, the 2020. Yeah, end year 2020. So just to refresh ourselves on what their main focus is, we're not going to look at the financial statements because I think we can actually find that in a more up-to-date manner. But some of the points or the talking points that we discussed here is the gross margins being, moderate, nothing too special. But, again, what's the value proposition of Chewy? Well, they're trying to give you guys stuff for pets, and in a convenient way, right? So we have Amazon, which everyone knows or goes to for buying things online. You have Amazon streaming service and AWS, but specifically with the retail side, you can actually buy, I think, most of the things that you can buy on Chewy on Amazon. Chewy just gives you, that little special touch. I know they send you like a card when you get a pet. They have access to that data. We have also like Petco, and what's the other one? PetSmart. So they're all competing in like the same category. I think PetSmart or Petco might be public. Let me actually see. Petco stock. Yeah, here we go. So this is Petco. So Petco's trading at about $6 billion, 33 P. I don't care about that, but let's see their performance. So their performance actually has been, not the best, but not terrible either. Well, actually, what am I saying? Not terrible either. This is the all-time. Oh my gosh, look at me. Not terrible either. No, this is since IPO, it's been remarkably poor. 5 year, they haven't been public for that long. 1 year, they've basically done nothing. So we might actually take a look at this one. Why not? So let's kind of see what they kind of try to focus on here. Free cash flow. So the fact that they even mentioned this here shows that they do have something to highlight here. They want us to actually look at there. You see, I want to post. If I pin this comment, what does it do? Message pinned. Oh, okay, so it actually brings your comment up. Yeah, so then I can unpin your message. It's a little less convenient. That kind of sucks. So the future streams I'm going to be doing from StreamYard, unless I figure out how to actually optimize that, and I can just bring up your comments. I can probably have both StreamYard open and this software, and then that's going to be better because switching is so much easier, and I can actually bring things up. Okay, so I'll answer some questions here. So I saw you mentioned you were impressed by AMD's new GPUs. Their new architecture will most likely be way more efficient and as fast as NVIDIA. Yeah, I am. For example, the 6900 XT is pretty impressive for what it is. At launch, it wasn't that good, but after all the driver updates, it actually is a very competent monster, right? How often do you reevaluate companies through your software? I imagine it would take a few quarters for the story to really change. Yeah. But also, the thing is, you can also reevaluate it because maybe the prices come down, and therefore the valuation is different. So there's also that. Yeah, dear Chewy bag holders, for buying at 120. Yeah, because we look at Chewy. Did it hit? Where did it hit 120? Oh my gosh. Yeah. F in the chat. Anyways, I also almost skipped your comment. I see Licks. You say, can I talk about HPQ? Yeah, I can actually go into HPQ here live. So again, this is to like a test for everyone. Hopefully, like for example, I just discovered I can't bring up your comments on this platform, which is very upsetting. So it already kind of gives me like a, how do I say? It kind of puts an X because I can do this, and you guys can't really see it too much. Like if I pin your comment here and your question, like let's say this, pin comment, it doesn't pull it up here live that I can see. But let me know if it does pull it up there, okay? So yeah, let me know if it does pull it up. And if it does, then it's okay if I can't see it. I just want you guys to be able to see it. So right now I just pinned Lix's comment. And if you can see Lix's comment pop up, then okay, I can make that work. Otherwise, I'm gonna have to figure out an adaptation and kind of have both softwares open. Okay, you guys can see your comment. All right. Okay. I mean, I would prefer it to pin or to come up onto the actual, live, but, I guess that's fine. I'll figure it out because that's a better way. So I'm just gonna take the extra time and put StreamYard plus this software, and I can probably do both because that's just better to do it that way. It's so much easier, more optimized to just have the comment there. So I think I answered your question, Jamie. I reevaluate them, because maybe the price went down, and so maybe because the financials, maybe I've said something at a different price point, but maybe at a newer price point, my opinion might change because maybe not the story is different, but the investment prospects have changed, right? So it might be more favorable. Oh, you like the new layout, JP? That's good, and it's okay. I know that you're very busy. You're in the big four, so don't worry. Just tune in afterwards. Yeah. The other program pin is way better. And oh, I see Greystone. So your question about the newest video regarding financial education, that is of course going to be a subscriber request series. You guys request me to do reaction videos, and if you want to see like basically my perspective on something, just let me know and I do it. I did receive a lot of pushback on that video, which was interesting. Not majority was positive. I think it was very, very small minority, and I have a policy to try to respond to every single comment when I can. There are still comments in there that I still haven't responded to, but for the most part, I think I've responded to most of them. And again, there was just I think 1 or 2, maybe 3 comments of maybe 4 actually. I don't know. Comments that were actually didn't like the fact that I was doing it, but as I said, this is a side passion for me. I'm not trying to sell everyone anything. I'm not trying to be like a politician here. So I just do basically the videos that you guys ask of me, and then sometimes I'll speed it up because it's a time sensitive. In that case, that financial education video was more time sensitive. So I just did it, and I watched a little bit of the video, and I thought it was extremely cringe, and some of the information was a little bit egregious, but I was a little bit perhaps harsh, and I think deservedly so, because that individual has been known to promote some things and behave in a certain way that actually targets newer people to the market, and it's a little bit of there's no other way to say it. It's kind of like disgusting behavior. So yeah, he's kind of like taking it a little bit too far, and so I kind of then responded, but tried not to say I didn't call him stupid. Okay, so I don't, you guys could look at the video. I never called him once stupid, and I never said the words, he is stupid. But, whatever. So, yeah, and I know that it probably pulls up 5 to 10 seconds after I say it that I'm pinning it. That's insane because, there's already a delay between the stream and that. Yeah, no, the other way is way better. I'm going to have to use that software. I was about to go to sleep. A notification popped up. We'll watch the live tomorrow. Have a good night. No, of course. Don't worry. If you guys need to go to bed, don't worry. This is, again, Q&A. You guys ask me whatever you want, and I'll start looking at some stocks live. Could the Fed balance sheet run off? And let me actually pin your message. Could the Fed balance sheet run off plus rate hikes be a sell signal for the market short term? Could we see some once in a decade price briefly? Maybe. Depends on how bad the sentiment becomes. we did know, or have been kind of discussing the liquidity crunch that we're still not out of, right? So it's been, I think, 3 or 4 months now that I've been talking about liquidity crunch publicly on this channel. It's kind of like a big theme, I guess, for the beginning era of this channel. But you know, once we're kind of out of it, and you see a lot of people are perhaps a little bit more bearish than usual, you know, maybe want to buy more assets than normal. I just continue to buy assets when I find them to be attractive prices. I don't really care, but I do talk about those things. What do you think about TSMC or Taiwanese companies in general? Too risky due to China? If you think there's going to be like some sort of conflict, of course it's risky. But no, fantastic businesses, Taiwan Semi. I'm not saying on a price action wise, but it's good. All right, going back to Chewy here. So we see Chewy is at an $18 billion market cap. We're looking at Petco. Petco has physical locations. Chewy's online. Their physical locations probably just warehouses and the like. So let's actually go on their website to kind of get a feel for what they're... Because from what I understand, Petco is kind of like legacy and trying to adapt. But Chewy over here, and no, I don't want to log in. Chewy over here, let's see here. Yeah, they're like, I think they're a bit nicer. No, I don't want exclusive offers. Get out of here. Get out. You're ruining my life. All right, so I think if I'm being objective, and I have no skin in this game, Chewy's website is superior, but they're very similar. I mean, I don't know. I like the curved edges here. I'm being kind of picky there. Let me see how easy it is. Okay, so this is already kind of annoying to me. I don't want to search. I just want to get my things and get out of here. Yeah, so this is easy. Dog, cat, horse. Horse? That's insane. All right. So brands, this is so much easier because look, I have to type in a location. I'm not going to type my location live. So, okay. Oh, never mind. Okay. So shop by pet. So they have this. Do they have more options? Shop, pharmacy, shop. Okay. No, it's basically the same. So it's just a different layout. I think my eyes, I appeal more to this. It's cleaner. Yeah, I think this is cleaner. This is a little bit too cluttered in my opinion. But that's not too important for the actual fundamentals of the business. We're just kind of like looking from the consumer standpoint. Now, let's actually go into the Chewy 10K. So I was already here. What am I doing? Oh, get out of here, Norton. No one cares about you. Let's actually take a look. 2019. Oh, is that it? They don't have 2020? Quarterly results. We'll just go to the quarterly results. Where's my 10Q? 10Q. Press release. Financial statements. Let's go with the latest one. Cool. Go here. I'm just doing this live so you guys can see how quickly you can really get to these things. If someone didn't know out there. We're looking for financial statements and supplemental data. We'll use this tab to actually find it quickly. So this is the balance sheet. So current assets, current liabilities. I don't see a debt. Let me see, no debt. Total current liabilities, total liabilities. Yeah, they don't have any debt. They just have a lot of operating lease liabilities, probably warehouses and the like. Current assets, cash. Okay, so they have a nice amount of cash, no debt there. Inventory is an important distinction for this business. Let's actually go to Petco 10Q. Okay. 10Q. Okay, they have a 10K. Is that the most recent one? Because we just want the balance sheet here in this instance. Go here. Financial statements. Go here. We'll use this tab to scroll quickly. We're here. Assets. Okay, liabilities. Long-term liabilities. All right, so they do have some debt, it looks like. Operating lease. No, wait. Credit facilities. Net current portion. Yeah, right here. Senior secured credit facilities. A nice way of calling that debt, but that's debt right there. Leases are a form of debt, by the way, because like when you sign a lease agreement, every accountant out there can attest to this. When you sign a lease agreement, you do owe that money, right? You can't just say, "Oh, I'm out of the lease." Ha ha ha. No. There's going to be a consequence for that. Sometimes you have to actually sublease a property, and you're responsible for subleasing that property. But no, leases are an actual debt obligation in some way. They're not a formal debt obligation, but yeah. So they do have some debt. They have less cash than Chewy. So Chewy, let's say they're officially the big dog, right? Between these two. Definitely they're the big dog. I just want to go to the income statement. Let me actually go here. Do they really not have the quarterly? I want the, well, let's go to annual. Proxy, annual report. Let's just go here. Hopefully they have the financial statements. Maybe in here. Sometimes they do. Trying to find just their sales. If not, we're just going to go to the model. All right, we'll just go to the model. Sometimes it's just easier to pull it up in there than just asking the company for it. Okay, so let me zoom in because I know some of you watch it on here. So CHWY. All right, let's wait for it to kind of pull up. And you guys can kind of, again, see this live. While this is loading in, well, it's probably already loaded in, but let me just see what you guys are saying. Hi, guys. Hello, fellows. Where's BP? I don't know. Pet health insurance and vet clinics. Okay, so that's interesting. So let me actually, I'm going to confirm that. Petco. They're calling them Petco Health and Wellness. So that actually sounds very like, that's in line with what they're kind of changing. Yeah, Petco Wellness Plan. So Petco, while every plan is different, the different plans that usually go from different investment for pet owners spend per year. Okay, so that's really interesting. Chewy, let me see, does Chewy have anything like that? Pet insurance. Here we go. So they also do it. So pet insurance. Chewy expands into pet insurance, partners with, okay, so then here we go. Let's look who these guys are. Pet insurance company. So then they are probably offloading this liabilities. So then let me actually go back to Chewy's. Long-term liabilities. Are they recording these liabilities? If they're not recording these liabilities, and let me again go to liabilities, accounts payable, book overdrafts. No. Okay, so they probably have another sheet over here, net sales. Oh, I actually wanted to see this. So they're making about 5.8 bill, and let's actually see how much they're making. So let's go to the data sort, revenue, 8.8. Okay, so 8.8 versus the 5.8. So Chewy is larger already. And let's actually go back and reaffirm the market cap. So market cap of Chewy. I'm not doing a price of sales, by the way. I had a question reference price of sales. Okay, so about 18 bill. I had a question about price of sales from a subscriber. And if you're listening, subscriber, I'm not going to name drop you just in case you didn't want anyone else to know. But I didn't see you comment yet, so you're not in the chat as of yet. The problem with price of sales is it's a comparative metric. So when you actually see someone using price of sales as a valuation metric in isolation, that's a very noob tier form of analysis. It's not really utilized. It's utilized as a comparative analysis. So you would compare two different assets, and it not preferably, but usually they might be unprofitable. And then you're kind of already assuming that you are interested in that asset class. And so you're looking at two different assets and you're just trying to evaluate based on the sales figures, which one is a better proposition. And they're supposed to be two companies that are very similar to one another, extraordinarily similar. So maybe this is a good example, like we can use like Petco and Chewy, and price of sales might be an appropriate measure to kind of gauge between the two, which I'm doing right now, but I'm not using it as a valuation metric. I'm actually just trying to see like the size, the scale size for both of them, what they're kind of priced at. So Petco, did I close it out? I think I did close it out. But Chewy is about an 18 billion market cap with, again, the sales figure of 8.8. So let's say it's like 2 point something. And Petco sells, what is it, 5.8, and then let's go Petco stock real quick, and that's about a 6, so nearly like a 1. So we already see that Chewy, just on the face value, is trading at a premium. And again, this is to answer your question, subscriber out there. So, and you know, I have a good memory. I saw your comment. I didn't get to respond to it yet, in the latest video, but remembering that comment, I'm answering it here. And if you don't see this video, I'll just go back and make sure that I answer your question, you know, through typing it. But I think it would be good to share this information with everyone else. So yeah, on just like a quick glance, Petco is cheaper, but it might be cheaper for a reason. Chewy might be resonating with consumers a bit more, and they might be growing faster. If I had to guess, they're probably growing faster. So let's go back to the model here. And I think it should tell me, yeah, average growth has been about like 62. Taking a look at this. And what's Petco's ticker? Petco's ticker is woof. Huh, that's funny. Woof. So let's actually type woof. All right, and then while this is loading in, I'll look at some comments. Okay, so wow, a lot of comments came in. All in on woof and bark. Oh, what is bark stock? Is that, are you trolling me, sir? Bark stock. No, bark is here. What is bark? What the heck is this? Bark.com. What is this? Bark, box, and then you're all into this. Okay, so what is bark? We want to make dogs as happy as they make us because dogs and humans are better together. Okay, so I still don't know what this is. Bark. What do you do? What do you do? We launched a monthly themed subscription of all natural treats. Oh, okay. So food, toys. Okay, so it's a subscription. Okay, so I get an idea of what they are. All right, let's go back to the model. Do you think the Netflix could get close to 300? Yes, I hope so. I really do. Because I bought Netflix a little bit bigger than what I normally would. But remember that the 3% allocation I have to it isn't like the actual allocation when you take into consider total assets. It's of my public portfolio, but I have capital that I've been having on the side, and I'm waiting for things to actually get better. I've just chosen to start accumulating Netflix, and I accumulated slightly more aggressively than maybe I should have. I'll say this, that perhaps I did, even though Thor Industries is not that far down, because remember, I did the video on Thor, and I sounded very bearish on Thor, and kind of like following when I thought about it later, I probably did allocate an improper amount to Thor. I probably should have allocated less and then allocated a little bit more, because I do think that there's a high probability that it does kind of come down more from here. And so I even though I thought that, I didn't like do what I think. You know what I mean? So, but it's completely fine. It's not like a big mistake, because I still think I allocated a responsible amount, because again, Thor is kind of like my play if the consumer doesn't suffer a lot. And then I have another play that I won't mention by name because it is a micro cap in the portfolio that would benefit if the consumer does suffer a lot. And it's like my insurance play. It's not an actual insurance company, but it's my insurance. It's like the consumer gets like absolutely, fondled, or gets their, as some might say, get their cheeks clapped. All right. But yeah, item 8, gang. Item 8. Hi, could you give us an overview of how you would analyze the potential of the company like Fujifilm Holdings? Okay, well, let me put this right here, Fujifilm. I'll take a look at this, because that's going after HPQ, because I already got the request for HPQ. Photography company. Okay, well, I'll put that there, and I'll try to remember. TJ Maxx as a part-time employees, pet insurance, but not people insurance. That's funny. Steve C, really, that's hilarious or sad. Okay, so, all right, looking down here. All right, so when are the financial education videos coming describing the model? Financial education videos describing the model. Do you mean like, what do you mean by describing the model? I mean like, you could easily, just so everyone knows, and I did this for Austin's little brother. For those of you who know Austin, and basically like I recreated Everything Money's model. That one's a very easy one to actually formulate. This one's a little bit different, but Everything's Money model is very easy to construct. I can actually probably like give everyone the template if they want, but I don't know. I question it because I'm like, well, they supposedly spent hundreds of thousands. I don't believe that. I don't know who charged them that money, but anyway, we're not talking about that. We're not talking about that. What are the financial education videos? Yes, I already answered that one. I get my haircuts at Petco. Okay. That CFA bow tie guy used the PS metric to derive 500. Really? Okay. Fun fact. He actually made some interesting videos regarding, I don't know, I forget what stock it was. And my wife was, before we were actually married, she actually invested in something because of him. And I remember cringing at it. And interesting, he's still making videos. I haven't seen any of his videos as of late. I saw him a long time ago, and that's about it. But that CFA guy with the bow tie, he says bow tie nation. I think I know who you're talking about. Sounds like Kathy Woodstock, Cameron Stewart. Okay, so capital mindset. Did you hear Kevin? Okay, let me pin this because that, and again, just so everyone who's coming in, I'm using a new streaming software. So the audio is supposed to sound better here, but StreamYard, so, oh wait, no, they'd conflict with one another. I can't use StreamYard and this at the same time. Oh well, StreamYard's not that bad. I'd prefer just to be able to do that. That interface is so much better to bring people up because this is kind of weird. But anyways, did you hear Kevin bought millions of dollars back into Tesla? I kind of heard that. I actually just heard that today. I don't really keep track too much of that, but yeah, interesting. I'm going to try to get a Tesla bull on the channel. I'm going to ask him either today or tomorrow and try to get him onto the channel. He's just, been cordial and been interacting in the comments section. And I know that he has a certain stance on Tesla. So I think I'll actually, ask him to come on and kind of represent his ideas and try to see that. And yes, I did say fondled, by the way. Because I see that comment asking me fondled question. All right, hi Fabio, general question, but do you recommend getting a CPA or CFA for working in investment banking portfolio management? You don't actually need those, but the CPA route can help you, and then the CFA is kind of like a flex, if anything. Not necessarily a necessity unless your employer actually requires it. But yeah, I'd say that I've heard of a lot of ways that people go the CPA route and get into that. Invest for the future. No, the model's not publicly available. It will be available in latest August of this year. Thoughts on getting a CFA as a finance undergrad going into year 4? Yeah, you can get a CFA if you want like a flex. What about your take on Apple? Okay, so I'll actually put Apple as on there. Patrick A, are you assuming any terminal multiple? No. Terminal multiple approach is actually in here, but I actually have it turned off. It can do that. But anyway, going back to Petco, let's get back to this. So analysts have it at a strong buy, price target of $18.52, so 11.22% downside. On a PE basis and a cash flow basis, it's a lot cheaper. Return on assets, return on equity, return on invested capital. All this is kind of garbage right now. We'll actually investigate that in a second. Okay, so this is them IPOing, so I don't really care about that. Let's visualize this. So revenue actually has been growing. They had this massive jump in 2019. So let me actually look at this. Petco 2019 acquisition. So that already tells me they probably did something there. Petco Health and Wellness Company. Petco buys veterinary services. That's 2022. Let me actually put this on this side, and sometimes it will do it better. Petco 2020. Okay, so acquisition of LLC Petco Health Insurance Wellness Company. Interesting. Veterinary services. We're looking for something that has a high revenue because it's all of a sudden like a big. Petco is said to be a plan to sale or initial public offering. They might have actually just grown. It could be that they just grew and I'm just like questioning it. But this is a big jump right here, 2018 and 2019. Oh, I'm looking at the wrong year. That's why. Okay, 5 acquisitions, 4 investments. Looking for 2018. Petco tries Amazon proof its business with a new store. No, that's not what we're looking for. I guess not. I'll see if anyone actually mentioned if they did. Okay. No one's mentioned that yet, but okay. So let's take a look here. Cash flows are expected to grow. This is like analysts' estimates right here. So analysts are estimating these levels for this year. So they're expecting it to grow. We're taking a look at Wolf. Wolf is probably like pretty cheap if I had to guess. But the thing is, this cash flow, I don't know how this is sustainable. Like the trend line is here. So probably going to come down. So I think oh wait, these growth rates are insane. Yeah, that's why. We can't assume these growth rates. And also, this is all like after SoFi. So we actually have to change some of this in profit analysis. We're going to say no. So we're not doing that. And let's no. And then this is not a financial institution. Well, actually, this is not even triggered yet. So because it's not a financial institution. So let's actually do, let's go to ratios and kind of analyze this. get an idea for this. Okay, let's get rid of this noise. So I'm just going to get rid of these years because I don't think they're that important. Current ratio is pretty good right now. This is now, right? By the way, this is the most recent. Total debt ratio is pretty good. Nothing crazy. I'm just kind of looking for things that stick out. Earnings quality, okay, pretty good. Just one bad year there, but no, pretty good, and pretty good last year. Pretty good then. ROIC is pretty garbage if you ask me, but well, these are pretty garbage too, but you know, they're producing a lot less income than their cash flows are actually showing. Let's actually take a look over here. PP&E, property, plant, equipment. How much of that do they have? Yeah, they have a decent amount, 2 billion. So out of 6 billion. Long-term debt. Okay, so we're actually, yeah, so that's a decent amount of debt. That's going to be a problem. This other long-term liabilities could be anything from their insurance play, if they're doing the insurance liability on their balance sheet. So yeah, let's go back to Chewy for a second. Chewy. There we go. So yeah, Chewy has a 14.24% upside based on analyst metrics or analyst estimations. Price to free cash flow. So this is extremely expensive on a cash flow basis when compared to something like that. Cash flows by analysts are expected to just blow up. That's weird. Shares outstanding, cool. Actually, let's take a look at the sentiment. Sentiment score is 1, so above 1. So this is actually a good sentiment. Reddit has some mentions. This is more recent though. Pet centric for strong growth. Okay, so I guess reading through here, there's a lot of positive sentiment. And let me actually just do this. So, well, that's this. I don't want to actually get rid of this. Let me go to my channel. Chewy stock. Let's see what people are saying, because this is all right. So Chewy stock, goodbye. Let's find out. Okay, so they did an analysis, trying to see if there's any. Oh gosh, skipping over that. Chewy warning ahead. Trying to see if there's overly bullishness. How does this have anything to do with Chewy? But yeah, what we learned. I guess this is like saying, oh, this is the Motley Fool, because they probably said like this is a strong buy, blah 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 blah, and this like went down. They're just like, what we learned, what we can do better next time. It's like you do that all the time, guys. Anyways, just quickly looking at that, and kind of like another sentiment screener. All right, let's take a look at this for credit rate return. Let's start with like a 12%, and we're gonna stick to Chewy, then we're gonna go back to Woof. Buybacks, we're actually going to assume some level of share dilution. I think just taking a look at the ratios over here, do they have debt? Let me see if the model is actually picking up some sort of debt. Data sort, goodwill, long-term debt. Okay, so they did pick up like a small amount of debt in the very most recent earnings call. So probably lumping in, whatchamacallit, leases, but let me take the look down here. Ratios here, total debt ratio. So nothing concerning, much better capitalized than something like Wolf. ROIC was really good here and really good there, but those seem to be coming down. They're pretty bad right now. Earnings quality is though picking up. It's pretty good here, pretty bad here, pretty bad here, pretty bad here. What was it like in 2020? I like to always take a look at the correlation, because it's not a causality, but there's sometimes a huge correlation between that. So taking a look at that just for fun. All right, so 2020, and let's actually go back. So I think this one breaks correlation. So because this is end of 2020, starting of 2021, then this is end of 2021, this is end of 2022. So the actual earnings quality has been improving, and I think, remember, where are you? Here you go. This is why I say it's correlation, not causation. So the end of 2021 was like right here. So it's actually kind of inverse there, but probably because this was heavily overvalued. And just taking a look at a quick glance, it does appear that gross profit margin, it actually has been improving. This is good to see. They're improving efficiencies in terms of providing their products and services. But yes, so growth rate is a lot more, as we'll actually see. I mean, the other one was actually 20%, but I don't know how much of that is a fluke because we did see the visual. This one's kind of like more steady. Estimates actually is a kind of a less growth, but maybe we assume they continue on trend line because a lot of people probably were pushed to buy things at home. So, yeah. I am going to assume some level of dilution, so I'm going to actually go negative 1.5%. Or maybe just 1% for now. Just 1% for now. Well, I'm actually seeing here. Let me see some comments. See if I got any questions. Find the YouTube portfolio. You could not find the YouTube portfolio. I looked on the spreadsheet. Can you show that? Yeah, let me actually pull up the... I can pull up the portfolio. All right, I can pull up the portfolio here. So yeah, this is the portfolio. There's already like a couple people on here because this is other people right here up top. But yeah, this is the portfolio. I'm sorry that you can't find it, Steve. Just look up like on my channel, portfolio update. There should be a link there. And I had a question from someone else asking like, when am I gonna like show the portfolio? It's like, no, I always show the portfolio. And I'm not going to be charging for the portfolio. So I'm not going to have a service where I charge people for the portfolio. Just so everyone's aware. It's not going to be a thing. So I'm not going to be showing my trades or anything like that. It's just here when it's updated. It hasn't updated in a bit because I haven't really done anything anyways. But anyways, going back to the model. Just wanted to show that there. All right, so Chewy. Growth rates, I think we can assume. We can kind of create a range here and probably assume somewhere along the lines of, I mean, does it really matter? Well, we're probably looking at this the wrong way. So let me actually see, because this is right now, this is where, we start to brainstorm. This business is probably not very cash flow positive. And taking a look here, it's not. It actually is... Yeah, it's actually at just under the negative line, maybe just at the positive line here. So we actually start to have to use this tool here. So we are doing an unprofitable analysis for something like Chewy. We're not going to assume a 20% margin. So let's actually take a look. And this is a good point of contention. Let's actually go here. Woof. And this is going to be kind of like, because I'm doing it live, I'm going to be doing kind of like a rough estimate. Ignore these. We're going to be looking at the data sort. Right here. Let's see here. So about like, let's say 3, and then like at 8-ish, 10%. So we're gonna try to then be, oh, wrong place. We're trying to be a little bit more aggressive to give Chewy the benefit of the doubt. Let's be a little nicer to Chewy. Let's say they achieve a 10%, and let's say they achieve it in year. We are looking at Chewy, right? Yeah, unprofitable analysis, 10%. When should they achieve it? I think they could probably let's push it out. Let's keep it at like year 5. And the growth rate, it might actually end up slowing down. That might actually be what's being priced in, because let me see what 5%. Yeah, 5%. I think the market might be pricing this in for slower growth going forward. They might be like saturating very quickly. So let's say 5%. Let's go with a high of 10, middle of 5, 7 there, 3, 1. Okay, so, and keep in mind, we're only discounting it at about 12% right now. So taking a look at this, we see revenue. Revenue's, again, estimated to slow down. Another like very, let me actually pull this up here on this side. Okay, so some analysts actually have estimates of like about 10%. So we're gonna, but that's only for next year. So we're gonna actually put in like a 15, or let's go with the 18. Let's go with the 18 here. Okay, so then we have like a huge variety or a huge variable, right? So let's actually say we don't really know which one's the most probable. And now, I guess what is left to say is, let's actually see real quick here. Dilution is, yeah, rather tamed, I'd say. So let's actually try to be a little bit more precise. Let's try to give ourselves a greater margin of safety in that aspect. And let's start to discount it because we're not really sure. So if we wanted greater levels of return, also, you know, a kind of reduced risk, we can kind of see what we're kind of penciling in here. So we would actually need, let's see, what exact kind of growth do we have to expect? 12, we're almost there. Yeah, around there. So 13%, and these assumptions, we're about there. But the model's not really liking this. So it's not liking this because these are also very valid scenarios. So it's saying negative 1.31%. But yeah, taking a look here, Almond Z-score, yeah, and then companies, yeah. So, I mean, that makes sense because we did just look at the balance sheet. It's not good. So I'd say Chewy might have actually entered a, I don't know, like a relatively good place, especially where it was before. I think before it was more hated. So I have to remember, I have to remain objective here. At like $60, we were kind of teetering right there where, you know, there wasn't that much of a margin of safety. But where we are here, it's not as bad, right? It's not as bad. That's what I can determine here. Again, I am assuming that they can achieve, they maintain their current profitability, and then they kind of get over there to about 10% eventually on year 5. If they achieve that like sooner, we do see that it becomes more valuable because they're basically improving operations quicker. Now, if you think they're going to achieve greater than 10%, sure. Well, I'm already assuming they're going to be better than Petco. They might, you know, let's say they I don't know, they get 15% in that same year 5. So the value proposition, of course, there is better. And actually now the model actually likes it a little bit more. It says, okay, now 0.63%. Because we are kind of penciling in and saying that this is equally as likely as an 18%. So 1% is equally as likely as an 18%. How likely is that? I don't know. But, you know, could be the case. We're going to take a look at Wolf soon. Okay, so let me see if anyone's had some questions. I know it's more of a commodity type investment. So I have to go back. Communicate the fondler. You guys are talking to one another. Just an opinion. I think you should keep the reaction videos to 1% of your content. I think the value you bring helping people understand how to buy stocks. Good prices is way better for subscribers. And let me put in your comment here. Yeah, look, the whole source of all my content is pretty much from you guys. If you noticed, I don't look, let me pull this up because I think, how often do you see videos on stocks in here? Take note of that because it's not, I don't drive the content. You guys drive the content. Okay. So, yeah, like I want to do a video eventually about AbbVie because I've been asked, because, you know, AbbVie is up. I'm up about 164% on AbbVie. But telling you now about AbbVie doesn't really provide value. So I don't go back and be like, oh, look how great this was. Blah, 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 blah. I think it's a good case study because when I bought it, it was this whole Allergan deal. And it's a good case study of sentiment-driven fear. Oh, I didn't even notice that Boston Omaha is like down 6%. Boston Omaha has been like so volatile. It's like up and then down, up and then down. And that's why it's only in the nibble range. Like I only nibble into it. But anyways, we're not talking about that. The point is you don't really see a lot of videos about the stocks in here. Unless they're kind of be added like immediately, and then I kind of just don't talk about them forever, right? I just don't even talk about them. Oh, and shout out to Aerojet because Aerojet's now finally up a decent amount. Just all of a sudden just got boosted because of rating upgrades and stuff. But yeah, I don't really talk about any of these stocks, and I don't even talk about the stocks like on that side too much because those are the speculative ones, and some of those are micro caps, so I probably won't ever talk about them. But yeah. You guys drive the content, so when someone asks me to do a reaction video, I'll take it seriously, and just like how I'll take everyone's request seriously, even if it's a company that I might not like, I'll still do a video on it, and I'll give my thoughts. So, yeah, just like that's my perspective. That's a lot of what I said. I mean, I got some like harsher criticisms than that on that video, but you know. at the end of the day, this is a passion project, so it's not really like something that, just do what I want, I guess, in that. All right, so do you bet operating cash flow, net income, or free cash flow? I think right now, because of the context, and this is a question about ROIC, I think right now it's basing it off of, because it does change. It actually does change depending on the company, and I have it programmed to do that. But I think right now it would be programmed to do it off of, I think, net income for this, or no, cash flows. I think this one would be cash flows. Yeah, this one I think would be cash flows because it's more of an online retail space. Looking at macroeconomic indicators, is looking at macroeconomic indicators useful to decide whether to put money in the market or raise cash or just invest as long as the price is right, wins long term? For most people, that's going to be the most successful approach. Finding assets that they like at good prices and then buying those. That's going to be most successful. Most people are going to absolutely lose their life savings, or not lose their life savings, but underperform relative to what they otherwise would if they paid attention too much to macroeconomics. Because the best way I can simplify the argument is there's so many little details that you have to spot when trying to be accurate about macroeconomic predictions. If you miss one of those, you're going to be off, and then you're going to wonder why you were wrong. So, for example, I received a comment, and maybe let me see if I'll pull it up. So let me see, desktop. I have it in the where are you? I did take a picture of one because I thought it was funny, and I'll share that with you guys because you're asking. So I took this picture of this comment. It says, and I covered the person's face up just in case I ever wanted to show this, because I don't want to make fun of this person or anything like that. But it says your stocks went up because of all the money printing. So the fake number you're bragging about going up now, but when you go to sell stocks, the government taxes you. There is some chatter about taxing unrealized gains too. It's like selling a house because the fake value went up. Then when you sell a property, you pay capital gains taxes, but everyone else's houses got more expensive too. You can buy a new home, but you're just swapping. There is no gains. Food prices went up, gas prices are up. Enjoy your fake gains. I responded that way because I genuinely did not know how to respond to this. And I have a policy where I try to respond to everyone. So I said, what? I don't even know how to respond. What do you mean? I know what you mean, but you lack a ton of nuance here. So basically, this is an example of someone kind of taking a macroeconomic picture, and they're missing a lot of key details regarding, what it is when, prices are going up, inflation and all that, what's kind of going on in the market. So this person's, I guess, opinion is that we shouldn't invest at all because prices, it's all fake gains. And I didn't quite understand it, but I'm just pointing this out, and I thought it was a funny comment. That's why it's titled Funny Comments 1. It's my first real, super funny comment. But yeah, this is an example of that. All right. So, okay. So, I've created a sheet to track YouTube portfolios if interested. Oh, interesting. Is it to track Meet Kevin and all that? Yeah. Chewy short float is 32%. Is it really? That's actually really interesting. So that's probably a sign that there's probably more to actually look, because we're just looking at it really quickly. Might be something that the growth rate actually they're betting on will deteriorate drastically. Because remember, we do see that here I have an analyst measure of kind of declining growth. But, I just looked at other sources. Other sources have it growing, at 18% next year, or a forward growth rate of 18%. So let me take a look at this short entry. Yeah, it's really high. Wow. I'm surprised certain people are not really heavily invested in it. Well, I guess because it's a high market cap, so it's very difficult to influence it. There's a little jab there. Chewy short flow. Okay, so what's your opinion on Discovery stock? I have a positive opinion on Discovery stock. I'm just not currently accumulating. I'm not selling the full position. I just sold some of it. I just trimmed it a little bit. Opinion on Discovery. I was talking about Honest and Tattooed Chef and all the other junk that you called YouTube stocks. Others have said here that's a future project. Of course, I see your post. Oh, Steve, I'm so sorry. I misunderstood. Okay, so Steve, so yes, I did mention that I'm going to like create. It's not going to be an ETF, just so everyone understands. No, I'm not going to go out and spend all that money to create an ETF and then add these holdings and call it the YouTube ETF. I'm just going to like bring together all the YouTube stocks, put them into like one pile, probably use like an M1 Finance pie, and then start tracking it, allocate it maybe on some sort of metric. I'll figure it out when I actually spend the time to actually look at all these companies. And I mean, I'll say this, if for whatever reason there's a lot of liquidity that returns to the market, I wouldn't be surprised that these stocks temporarily outperform in like a spurt, because again, these are, I guess at this point, heavily retail focused stocks. So a lot of liquidity returning to the market would actually affect those stocks disproportionately. And especially since a lot of them are high short float. So we could actually see like a little bit of a short squeeze in that capacity. But yeah. Oh, it's tracking Jeremy's public account. Zaster, I mean, you can, I'm not allowed to share the link directly. Oh yeah. Well, don't share the link. Oh, let me know what you mean by that. Can you not share it with me? And that's okay. You know, you don't have to do that. But if you want, you can just contact me, you know, on my Instagram. And then that's a good way for Capital Mindset and subscribers to actually start communicating. It allows me to like, you know, kind of sort through it. Email, I kind of keep email to like not so much, because email will like just think you're spam and just like throw you to the spam file. So, but yes. I'm not allowed to share. Okay, it's obvious that the markets will tank next 2 years. I mean, yeah, they might tank. Fabio, will there still be a follow-up on the... Yes, Boston Omaha, the reason why I haven't done it yet is Boston Omaha is difficult to kind of fully grasp, in the sense like producing a good content. I don't want to half-ass that video, especially since it's a holding of mine. So I want to kind of do it well. So I'm waiting on it. But I do like the company. That's like the summary of it. I like the company. I don't like it enough to, for example, to be the same size as Markel, because it still has yet to prove itself, but it has a lot of potential. It has more potential than Markel by far. But that's it. All of that. All right. So lots of pull forward from Chewy, I'm guessing. Where do you learn? Where did I learn to, okay, so there's a question, where did I learn to invest? I learned to invest through mainly investing and working. We're working in this field. So I'm having, I mention this all the time, but I'm having like a career change that's starting in like this summer. And then I'm kind of just I created this YouTube channel kind of to share the passion project and kind of share my thoughts, because I like talking about it. I always was deprived in the sense of finding other people outside of a work environment where I could talk to them about stocks, if we're being honest. But my course, I'm setting my Saturdays apart, and so like when I kind of my free time on my Saturdays, I try to set some time apart, like an hour or two, and I try to record what is coming up to be the course. And remember, my course, I've seen that other people have actually shared with me who are, you know, members of other people's courses, and they showed me like how, to put it lightly, silly some people's courses are in terms of the value proposition. I mean, as far as I've seen, and it's pretty much just like videos, and I don't want to do that. First of all, it'd just be on YouTube, and so I think that's the easiest format, where it's like again, it's going to be like the pay what you want, because the goal of these courses is to hopefully be a source where people can go to that instead of spending their money on other people's courses, because usually those courses target people who are newer and maybe need the money the most. So then, like I said, I think I said this in some comments, why I was so harsh to that individual in that reaction video is because I've received a lot of people reaching out and describing to me what is very questionable, disgusting business practices, encouraging people who perhaps can't afford it to even go into credit card debt to then pay for those things, and then realizing that the value isn't really there. And they're going into this because they're new to the markets, and they think that the markets is a pathway to quick riches, when it isn't. And obviously this person doesn't have the answer, because if they did, trust me, they would be like, I don't know, every hedge fund on earth would like just, I'll be offering them millions upon millions upon millions of dollars, way more than he's making in courses. He's making courses simply because of that. So what I'm doing is then saying, I don't need the money from courses. So I'm going to produce these courses and then just put them out there. And if someone wants to, give me some monetary compensation, they're more than welcome to. But the idea is that the people who need it the most, they can absorb the content, and I'm going to put effort into this. So it's going to take me time to actually produce those, because I'm actually going to have like homework and stuff like that. I don't know the extent of homework. Of course, you're going to have to not to cheat. I'll say that at the beginning of almost of every video. And the homework, it's kind of like an honor system, because I'm not grading your homework. I'll give you like the answers, and then I'll give you like the problems, and then you kind of figure it out. And then the videos will be like supplementary and, give you like a walkthrough on some problems, on some case studies and stuff like that. But yes, that's pretty much like the idea behind that. Okay, so I'm going to unpin your comment there and unpin. You mentioned in the past that you occasionally use options. Do you use them for hedging, speculation, or other ideas? Follow momentum on leaps. Thanks. I mainly actually use options for income, extra income. And occasionally I use it to take positions with less money down, right? So leveraged positions. One example that I did do with my brother, and I discussed this, I mentioned in a live stream, I asked him if I could mention it. He said yes, so. I think actually it wasn't on my live stream, it might have been on Strongman's live stream. We had contracts in Nokia. And so we put, it was a small amount of money, really small amount of money, and it did really well. And for him, it was a lot amount of money. So I won't say amount, but we bought a certain amount of contracts, and it was a good investment. Essentially, we bought long dated contracts, long dated call options. And we didn't expect, by the way, Wall Street Bets to take somewhat of an interest in that company. So we were on vacation. We were like in a cabin. And we were just like, oh, let's do this. We did some research and we thought it was good, but that was funny. All right. So where do you learn? Okay. So you mentioned, I can state my thoughts on Zim. Zim is that shipping company. The thing is, the shipping company right now is the best time for shipping companies. So yeah, Zip integrated. Yeah. So right now they're kind of exiting the best part of their time. I know that one of you out there is actually works for this company. I'm not going to, of course, name drop you. Don't worry. But that's like my standard policy. So, yeah, on the Max, yeah, they've done pretty well since IPOing in January 29, 2021. I think this is. The thing is, like, you see this, the market's pricing it at a P of 1.49, at least on a GAAP net income basis. And I think it's doing that because the market doesn't believe that it's going to be, sustainable. But the thing is, if you work there and you have that information, that's a huge advantage versus someone like me who doesn't know that. I would have to do a lot more research to really figure that out. So that's kind of my surface level thoughts on Zim. Okay, so Upstart is a loan company coming down a lot, and I think it's profitable. Okay, so but the thing is, loan companies, if I look up, I think this is one that had a lot of attention. Yeah, it's down like 76% from all-time highs. Max 110 when the IPO, like 2020, and I know we were doing a Chewy over here, but now I want to see this one. All right, what's the ticker? UPST. All right, so let's go for it. All right, so let everything load in. Yeah, but interesting stuff there. All right, Upstart. Okay, strong buy by analysts. Price target 151.81, implying 66.51% upside. All right, ignore all these growth rates. We're just here to actually take a look at some of the stuff. So they are actually profitable. Let's take a look at the data sort. Revenue's growing massively. Goodwill, long-term debt. Long-term debt's growing, but this is a financial company. You just gave me that understanding. Let's click here. Let's take a look at this. Business loans. Okay, fair personal loans for car refinancing. Okay, that's a dangerous game to play. In a downturn, you don't want to hold something like this. Wedding loans, that terrifies me. Personal loans kind of terrifies me. Moving loans kind of terrifies. Medical loans kind of terrifies me. All this kind of terrifies me. If I'm being honest, all this. I don't have the guts to invest in something like this. I don't have the guts to invest in something like this. It could be that like in a good market, they're probably can do great, but in a bad market, this not gonna do well. And I don't know how conservative they are. That's kind of like the next step is I'd have to say, okay, well, how conservative are they in their lending practices? That will determine a lot their performance. Okay, so you mentioned your past. Okay, so wait, let me get through this. Can we do stock review requests? Oh, that's actually what we're kind of doing here, Bob. This live stream is both to test out the new format. We kind of determined the other way is a little bit better. This one's so much easier to share my screen with, but I can't bring up your comments, which I prefer to bring up your comments. Your course and models in the community will become the next turtle trade experiment. Maybe. Don't buy my son's course. Fabio, my friend, I keep going back and forth on the Ford. We already bought and sold contracts on F-150 Lightning news last year. Now the question is, can they deliver on the huge demand for the EV truck? Ooh, yeah, that is the question. I think, and I have all my gearhead friends have all told me that the F-150, the electric F-150, will be the best-selling vehicle in the United States by far. I have to get back to you on that because that won't be like something I can do rudimentary analysis like right here, whether or not they're going to be able to do it. But they won't have a demand problem from what I understand. And I think that's definitely the case. Upstart is an AI lender. All right, so they're an AI lender. All right. The question is like everyone hypes up AI, but like, all right, effortless credit based on true risk. Check your rate. So I guess I would check my rate, find out what. Founded by ex-Googlers. Originated. Fully automated. Okay. So I guess the benefit is you don't have all these like bankers you have to pay. So they're probably going to be profitable if they develop it. The first course was 20 Zimbabwean dollars. Could you please take a quick look at Renault, RNO, assume 5% growth rate? Sure. Why not? All right, let it load in. Okay, so is this like a newer company? And Renault PLC. Yeah, there's no data right now for it, so I'd have to actually utilize it, a different thing. But yeah, I can't actually use it for this one. There's no data on it, or there's no data porting in. IMDb, INMD. Oh, actually, let me actually RNO stock. Let me see when they just came out or something. That's why, because I haven't programmed it for French companies, so it can't do French companies right now. That's why. So are they traded? Yeah, I won't be able to access their data right now. So yeah. But I can take a look at them like this. All right, so they're on this huge, massive downtrend. Let me see what kind of brands they have. They're French. I've been to said countries. Let's accept les cookies. Okay, so they're that symbol. I've seen those. I have no opinion on them really, which is unfortunate. But I know you looked for an opinion, but 5% growth. I mean, all these car companies, unless they're Tesla, they look pretty cheap. But they look pretty cheap on a GAAP net income basis. There's reasons for that, though. Okay, so IMDb going to pass quarterly. Okay, so let's actually get back to, let's close off with Chewy. Go Chewy, go Chewy, go. All right, there we go. We're back to Chewy. So yeah, Chewy at the present moment might be more of an interesting play than it was before. Again, we are down like 30-40% since then. So obviously it's been de-risked. Obviously, I'm not stating anything like, oh, I'm so smart, for saying that. No, it's like obvious. And the growth rates we can assume are a little bit more reasonable now. Actually, let me find precisely the growth rate we could assume. Oh, why did I start with that? It's probably more like 9. Oh, 8. 8-ish, a little bit less than 8. It's probably like 7.5. 7.5, and yeah, we're basically there. 7.5%. It rounded up to 8, by the way, but that's 7.5%. 7.5%, and we're basically there in terms of the assumptions we'd have to make. Am I comfortable with those assumptions? I don't know. The model is telling me, you can put like 0.95% of the portfolio into it, and it's saying it's okay. So, that's basically saying it's in the speculative bucket, and just putting it in there. And, we would generate a decent return, because that would, turn from 1% into about 6% of the portfolio in 10 years' time, should these play out. And that's the favorable scenario. Now let's take a look at Wolf and kind of close off these two stocks. And then we'll take a look at HPQ, because I remember that we did get asked HPQ. So we're not going to do an unprofitable analysis. So we're actually going to say no, thank you. So the growth rates, again, interesting to note that they're currently profitable, but you'd have to assume actually greater growth. That's a plot twist there. That's a huge plot twist. Okay. See, this is where I'd have to look even more into this, but it does appear that Petco or Chewy, well, actually, remember, Chewy, we did assume that they're going to achieve higher profitability metrics. Oh, yeah, I forgot. I put a 15% in there. I'd actually stick more with the 10% than anything. But, yeah, they're not actually that cheap if we're looking at this. We actually have to assume some decently high growth rates. I mean, I think 24% will definitely make it. And then if we assume just like slightly less at 20%, 20% makes it. 20% just barely makes it. So this is basically what it's priced for. 20%, negative 2% dilution, 20% growth, and that rate of return. But yeah, I'm ignoring the other stuff. So they're kind of not too far apart, because I think 10% in 5 years for Chewy is achievable based on the way the company's supposedly managed. But the short interest rate does indicate that a lot of people are kind of not, they're betting against that. Okay, they're probably betting against slower growth, if I had to assume. And Wolf also has, or Petco also has about a 12% short interest rate. So, price target is actually less. It's actually lower. So, listen to the analysts, but the analysts also have it a strong buy. So, but yeah. All right. So let's go over to HPQ. All right. Because I don't want to forget HPQ. Okay. So HPQ. Okay. This is the one that Buffett bought. And if we actually take a look at HPQ stock. All right. So, look at that. Just destruction in performance. Look at that. Amazing in like this time period. 162%. And then the Buffett bounce. I think this was it, right? It's HP. Yeah, it is HPQ. Where's the Buffett bounce? It was here. Yeah, this is the Buffett bounce right here. So HPQ, don't confuse it with HPE. So there's HPE and HPQ. They spun off from each other. So if you type it in, you can kind of see them. So this is HP Enterprise. So different businesses, but same name. And HP.com, if you can see here, you can kind of see what they basically focus on. This is the consumer-facing division. They sell like the laptops, the more of the hardware stuff. And I don't know if anyone has experience with Omen. I'd be interested to know. But yeah, the printer business, the printer business is like a money machine, man. It's a cash cow at this point. But anyways, HPQ, $40 billion market cap. It looks cheap. I think Everything Money owns this stock. Don't know if that's relevant to you guys. Growth rate, average growth has been like 5.8%. So 5. Let's say these guys are Chads and they just go 8%. Oh, wrong one. Completely wrong one. Sorry, brain fart there. 8%'s already there, so that's fine. Let's go with 1%. Let's keep that, and let's put the 8% over here. Let's put this at a 5%. Or yeah, let's keep it at 6, because 5.8 rounded to 6, and 2 or 3. Kind of see what feel for that. Let's move this, the 8%. Let's go kind of a higher one at a 12. All right, this is a buyback story. So this is probably what Buffett sees Oh. It's not typing in my 7. There we go. All right, so 7%. Oh, by the way, everyone, I'm going to have to close off the stream soon because I do have to head off to the in-laws' house. But I'm just going to finish off with this, all right? So, yeah, looking at, and again, I would make the live stream longer normally, but yes, I do have to get to the in-laws' house. So 15% buybacks, yes. And, you know, assuming these buybacks, this is, again, where a lot of the value proposition is really coming from. It's basically just making money, returning it back. It's very cheap. And when you have such a high, cheap yield, this is what Buffett's basically seeing. Low payout ratio on the dividend. Interesting. And, yeah, but if you want, like, oh, did I put numlock? Yeah, I did. That's why my numlock was off. No, my in-laws are very nice. I'm lucky with my in-laws. But yeah, HPQ is basically a buyback story. You can kind of see it right here. It's extremely cheap. You could, I think, assume declines, you know, in terms of, like, let's say 5%. Yeah, negative 5%, negative 3%. And yeah, you're pretty much good to go there. So looks very interesting. Would I own it? I don't know. Like, it's not something I'd be like completely opposed to. It's extremely cheap. Let's just, without a doubt, extremely cheap. High return on invested capital. I don't know if that's like a fluke. Let's take a look at the ratios real quick before we go. Yeah, actually really high ROIC. Oh my gosh, that's insane. So I guess it's really cheap because maybe there's a lot of pessimism behind it, not really much understanding behind it. But a lot of times when these companies split off, which I think we can actually find that out with HPE right here. When did this come up? So this one came up it came out in 2015. So they've been separated for a while now. I was going to think that might be like some sort of arbitrage. That's so interesting. I wonder why these are so cheap. I mean, they're both very cheap. They're both like legacy, old school businesses. They're just probably not drawing as much attention. Buffett might like it because it's really cheap, guys. Let me just say that. He might like it because it's really cheap. I think it's really cheap. It looks really cheap objectively to me. Looks like interesting prospects. I don't think it's priced for this growth. 12%, forget it. Just forget it. And let me actually quickly take a glance here. There we go. This is why this is here. This is why this is here. All right. So this is the split off. Ignore that. But this is why this is here. I would not think that that's actually the case. So I actually think this probably not going to be the case. All right. So we wouldn't probably assume growth. We would actually be assuming decays. I would just be assuming some levels of decay. This is above trend. I don't think it's going to stay this high. So it might be high and then kind of decline. So that would be something that's like an example of how you can catch yourself and be like, wow, it looks stupidly cheap, and get out of here. I'm going to delete that program because that's annoying. Comes up. Well, yeah, that's already my thoughts there. My thoughts there is it looks cheap for that reason. I think it's actually going to decline. Yeah, I'd say Julius Caesar, this is priced for tails I win, heads I don't lose much, but that's right there where probably we're being priced in. If that is wrong, if they continue to grow, you're going to be good. All right. So guys, on that note, I'm going to end the stream here. Thank you guys so much for watching. This is again like the test. I did a couple live evaluations here for you guys. Just quick ones. You know, we didn't go like crazy deep, but you know, there's no time to go crazy deep when I'm trying to cover all these things. But thank you guys so much for watching, and I'll see you guys on the next one.